Well, hello and welcome everybody on today's call, today's webinar back here in Germany. My name is Claudia and I'm really happy that you all could come here. Today we have our founder and CEO, Bill Rowell, on the call. We also do have the CEO of STORH on the call, Ryan Messer, and we also have some Q&As at the end of this presentation. So for all you new folks who haven't been on a webcast of Utopian Global, usually we go through the presentation of it in around 30 minutes, 35 minutes. Of course, today we do have some Q&As. We're going to show you two videos, very short videos, so that you learn more about the Utopian Global opportunity. But we really want to talk about today how to actually evaluate STORH. And as we do know, and you saw it in the invite, with double and sometimes triple digit gains and losses within a day, especially in the token environment, determining the actual true value of a token, even of an asset, is a very, very important calculation for anybody to do. And of course, we know all those promises from many, many companies where you buy into something and then, of course, the website disappears, or they promise you something like a daily return of a 1%, 2%. We have spoken so many times about that. So we want to clarify what really the difference of a real investment is, a real investment in real assets, and of course something which is most likely not not possible. And so with me, as I said on the call, I do have Bill Rowell, our founder and CEO as well, which I'm going to introduce in a little while from here. But again, the presentation is going to take approximately my part around 20 minutes, and then you should know all what actually there is to know for a first-time viewer with Utopian Global. And then, of course, we're going to go more into depth and more into detail. And I see here I have Bill on the call. Hi, Bill. How are you?
Great, Claudia. Great to be on the call back in Europe from our US trip. So looking forward to catching up with Brian, and welcome to everyone joining us from many parts of the world.
Fantastic. So as you see, Utopian Global, it's all about real assets which actually do exist, and making real income, and obviously having a better lifestyle. So I'm going to show you just very quickly in a video which explains in a nutshell the concept of STORH.
7.7 billion people are living on Earth. Global energy consumption has never been higher. Plastic garbage is filling our oceans, rivers and landfills. Abandoned open-pit mines poison our environment and our children. We have no one to blame but ourselves. We must repair damage and reclaim finite resources. We must find new, sustainable energy sources. How? It starts with investing in resources that can power the world. STORH is a technology-driven energy investment platform taking a pragmatic approach to solving our energy and environmental crises. Our projects include polystream plastics to fuel process, mining remediation and mineral recovery, fracking wastewater reclamation. Our investors benefit from stable income-producing assets, high growth opportunities, deep international industry experience, diversified project mix. Investing in STORH is an investment in a better future for the planet and for you. After all, doing good is easier when it's also financially rewarding.
Absolutely, that truly is the case. So we are living all in a stark and financial and environmental environment. So basically you have an imbalanced global financial system, meaning obviously the gap between the rich and the poor is getting bigger and bigger. So we have a crippling wealth concentration. The money we go and trade our time for is buying us less and less over time. And we do see a rise in government debt all over the world. world. I mean, we know, I mean, even here in Germany, we already have an interest rate which is going into the zero, so into even minus, which is, you know, quite challenging for people. We do have a plastic global crisis. You just saw the video here. It's not going to go away. This is going to stay here, and we can do something about, which is also lucrative. And we do have a high global resource consumption, meaning we have more people on this beautiful planet Earth. Every day, literally more people living, and we all need energy in order to enjoy the good life on Earth. And so the Utopian Global ecosystem, again, is all about that you can earn through investment in income-producing energy assets via STORH. STORH stands for Sustainable Technology and Resource Holdings, and I have the CEO, as I said, Ryan Messer here, and safeguarding your wealth by savings in precious metals. And Bill is going to touch on that in a second here. And by marketing our products, you can actually boost your income very fast. So Bill Rowell, he is the founder and CEO of Utopian Global. He actually launched this concept of safeguarding your wealth and precious metals in 2008. So Bill, over to you.
Hi Claudia, hi Ryan, great to see you there again.
Great to see you as well, and it looks like you got the memo today on the corporate dress.
I did, yes. I thought I'd better do the right thing on today's call. But it's great to be here. But what Claudia is really speaking about here is real assets. And gold was introduced to me by a good friend, also a good friend of Ryan's as well. In fact, Ryan probably met Philip Judd, the banker, before I did. I think you met him maybe 2002, 2003, Ryan. I met Philip the later part of 2003. And of course, he introduced me to you when I invested into the energy fund. But primarily, Philip was a man, as you are, Ryan, all about real tangible assets, real wealth. And it was 2003, it sold my last hotel for people on the call for the very first time. I'm from Melbourne, Australia, and I had 4 hotels over 20 years. And in 2003, I sold the last one, and I was investing. So I flew to Zurich, Switzerland, where I met a bullion banker named Philip Judge, who we're still in good contact with today. And there, he introduced me to the world of precious metals. In fact, he told me, he said throughout history, rulers of empires, royalty, and the financial elite have always put part of their financial wealth, paper wealth, maybe only 3 to 5%, into physical gold. And at that time, I had no understanding why. I was not a gold person. I loved real assets. I loved real estate. I was introduced for the first time to oil and gas, to Ryan Messer. But he introduced me to the world of gold, and I did not know why. But he said, Bill, you can go back to Roman times, and 1 ounce of gold, which is 31.103 grams, would actually clothe a person by a toga and a pair of leather sandals. He said 100 years ago, in 1920, 1 ounce of gold at a fixed price of $20 US. And at that time, $20 US would actually buy you a 3-piece suit, shirt and tie, and leather shoes. I just came back from New York. I could have walked in the Macy's in the 1920s with a $20 greenback and clothed myself very nicely, all for the equivalent of 1 ounce of gold. And here we were in a Grant Thornton accountant's office in downtown Zurich, and Philip said to me, Bill, here, what could you do with this $20 today? And I joked with him and said, Philip, we just came from having coffee and cake, and that cost $20. Well, I just came back from New York at a Starbucks there, probably 3 or 4 cappuccinos, $20 is gone. In Switzerland, in Zurich, 3 cappuccinos, $20 is gone, 0 change. But the same ounce of gold converted to any currency in the world, and pretty much every continent is represented here today, many countries are represented here today, an ounce of gold exchanged to any local currency will still give you a fine 3-piece suit, shirt and tie, and leather shoes, because today the gold price is around, let's just say it's around $1,500 US for an ounce. Back in 1920s, it was $20. So you can see, the longer that we hold on to our paper wealth, the less it buys. To build wealth, you need to own real assets, and that was the purpose for me going to Switzerland at that particular time. Now, the precious metal platform that we have is very, very simple. We allow people from as little as 25 euros per month to be able to save in the form of physical gold and silver, and it's very easy to liquidate too in case you need to convert back to your currency. In fact, it takes 24 to 48 hours to have the money back in your nominated account. But my primary trip to Switzerland was to invest. I'd sold my 4th hotel and I wanted to take some of those proceeds and invest it. Of course, I put some into gold and silver after I learned about that. And that was the beginning of a bull market at that particular time. So it was a long ride up. It was a very nice ride, actually. And here we are now, again, talking with Ryan Messer. Ryan I was introduced to at the end of 2003, 2004. And I wanted to take this paper wealth that I earned from the sale of my hotel, and I wanted to put it into real assets, bricks and mortar, walls, structures. But on this occasion, it was a natural resource sector. And I said to Philip Judge, before I invest, I love the concept that you have. I understand the idea. Up until this point in my life, whenever I drove up to the petrol station, to the gasoline pump, and filled my car, I was a consumer. It was a huge cost. We have multiple cars. Energy costs a lot of money. But by being able to be involved in this sector of Ryan Messer, it twigged to me, I'm going to position myself on the actual production side. I've become part of the ecosystem that's needed to produce energy around the world. So for me, it was a no-brainer. But before I invested, I got on a plane. I flew to Baton Rouge, Louisiana. And I met Ryan for the very first time in 2004. We shook hands, we eyeballed each other, and this guy, his knowledge, his passion, his experience, and the team around him. You can see Jay Stewart down there. Jay, he was there also back in 2004. Philip Judge is in this picture as well. And of course, the team is much bigger, but a much more experienced team now than what they were 16, 17 years ago. And here we are today with STORH, making real assets available to members around the world with of course, Ryan Messer. So I won't talk about the Raccoon Bend, but I'll just say one thing about it. Just like it was in 2004. I went to Raccoon Bend, nearly 6,000 acres, nearly 100 producing wells, actually. These pumps working 24/7, just pumping condensates, generating cash flow, whether I'm awake or asleep, working or not working, holidaying or whatever it might be. This site is producing great solid cash flow. And at this, where we are right now, of course, it's a relatively low risk asset, which I liked also a part of investment. Low risk management is very, very important to me. Hence the reason why I flew to Baton Rouge. And the Texas asset's the same. I visited this Texas asset multiple times of Ryan. Ryan himself has known this asset for 6 years. So Ryan, maybe I pass the call over to you and you can touch on your experience in this sector and why we're at Raccoon Bend.
Thanks, Bill. No, that's a good summary. I mean, look, for the same reasons why you were interested in it, I got into the business nearly 20 years ago. It's all about cash flow. And what I love about energy and oil and gas in particular, the upstream and midstream part of the sectors, is that, this generates cash flow nearly 24 hours a day, 7 days a week. Of course, all this stuff takes maintenance and takes people, but at the same time, that's what I loved about it. I'd read Robert Kiyosaki's book, the cash flow quadrant. It really spoke to me, and I wanted to create passive income for myself. And so that's really why I got into the business in 2001, around that time. But for the same reason that you partnered with us on the energy fund, and we drilled 120 wells within 2 year period of time. So a much different time. And of course, our strategies changed a lot, and our risk appetite is a lot lower. Our business model is more refined. And we're in a very niche market here, of what we're doing with STORH, right? So we've got oil production. So if you think about the entire supply chain, we're on the upstream part of it, right? Where you go and you're in goat pasture, like we were out there in the field all together. Like this field was 70, 80 years ago when it was discovered. Someone took the risk to drill the wells and produce the oil. And now we're on all ends of that spectrum. So not only do we produce oil, we're going to be taking plastics and refining it or refining it back into oil through a process called pyrolysis, basically heating it up without oxygen, converting it back to oil, which is what it was, before it was plastic. And we're putting it into the market, and we're blending it with other types of crudes that we do today. This is a business that Randall and I are involved in today. We have thousands of barrels of crude oil a day and blend it various types and grades. And so we take 2 or 3 different types of discounted quality of crude, and we upgrade it. And so for the refineries, we create a refinery spec barrel doing that. And so with STORH, we're going to be doing the same thing, just basically taking our business model and our niche markets and developing that for our shareholders, and with multiple sites around the world utilizing pyrolysis technology, which is, again, it's not new, but it's solving a problem that exists today, and it's become worse and worse. I mean, if you, as I say, unless you're living under a rock, you know about the plastics crisis around the world. And so we want to give value back to plastic. So how do we do that? We put sites around the world, and we allow people a site to bring the plastic back in and get value for that, converting it back into oil and giving our shareholders a very handsome return. But underpinning the company, we didn't want to start, and we didn't want to raise capital to cover expenses. We wanted an asset that was producing, and so that's why we ended up closing on Raccoon Bend. We started working on that acquisition when we started STORH back at the end of 2018, and of course it took a lot longer to close, but we closed on it in August, and we got a sizable interest in this field, which makes about 800 barrels a day. And as you know, we've done probably 6 or 7 different workovers. We've drilled several wells. We're going to drill a bunch more. So we're continuing to develop the field and enhance it, which has been our strategy all along. We don't want to buy assets that we cannot enhance the value of. So that's what we're doing for our shareholders. And we're coming up to nearly 1 year anniversary from our inception of STORH. So we have a lot of things that we're working on that I think are going to be of great benefit to existing shareholders, and of course, those who are on this webinar and are gonna see it and ask themselves, should they get involved? So a lot going on.
Yeah, well, it's a very important phase right now, Ryan, isn't it? You're in the asset expansion phase and adding value, which is really important. And the people on the call for the very first time, what Ryan means by that, and maybe I'll give an analogy from my hotels. I used to buy hotels that were run down, that were undermanaged. I'd come in there, I'd buy the hotel, and of course you do things to it. Maybe you had to rebuild, you had to add rooms, you had to change the complete structure of the place. And from that, we added significant value, quite often multiplying the sale value of the hotel when I sold it 5 years later. And this is really what you're doing here, because if I was to buy a hotel that was fully renovated, working with full management, you're actually paying the maximum price for that. And what you're saying with this particular asset as well, it's the same deal. If this asset had been completely managed, totally optimized, there's no real, even though you're buying production, as you say, you just paid market price for it. You've got no discount to it. And the whole advantage of this particular purchase is that you've known it for a number of years. You know partners in this particular asset, engineers, and of course geologists. And we know that there's still value. There's still more to be done to this particular asset, just like to be more can be done to a particular hotel. And that's really where the cream is. And and that was really my MO. That was my method of operation for over 20 years. I'd buy hotels that were run mediocrely, that people hadn't taken full advantage of the particular asset. I would maximize that. Primarily it took a 5-year plan, but then when I sold, I made multiples on the sale price, simply because of that. And we're not doing too much different from here either. You're adding value. We're buying more assets, with the whole idea of taking it from the current store price up to a €4 listing price.
Yep, absolutely. Yeah. So there are a lot of reserves. There are probably millions of barrels of oil in the ground that aren't classified as quote unquote reserves. And so we want to move those barrels from from what would be a lower category like probable or possible. We want to move those into the proved category. And the way that we do that is drilling, developing, doing recompletions in the field. There's over 100 producing wells in the field now. So it's quite a substantial asset. It's going to be around for at least 2.5 decades from what we know that's already in the proved category. And with further development, I think we could push that even further. So with good management. And so that's why, we've partnered with the team that has been involved in this particular field for 12 years, and they're friends of mine as well. And so we're really pumped to have that as the underpinning asset for the company, and allow our shareholders to benefit from the cash flow, which will happen. So obviously, when we started STORH, we came with the concept of distributing cash flow back to the shareholders or token holders. And so that's still the intent. Obviously, we're going after high growth assets here with our plastic to fuel initiative, integrating that with our current midstream operation. But we want to put that cash flow back in the hands of our shareholders, and we're putting together a plan to do that.
I just want to touch on these for people on this call for the very first time. Let's just talk about the balance sheet of a company in your sector for a moment, please, Ryan. You spoke about probable reserves, possible reserves, and proven reserves. And we're talking about oil in the ground or gas in the ground, the ones that's proven there. But you don't declare it because of the accounting regulations in the US. Even though you know there's oil there or gas there, you haven't moved it up onto the balance sheet yet, because otherwise it limits you've only got 5 years to develop it. Is that right, Ryan? So the point I'm leading to, there's a lot of value to be added there that we already know about that just hasn't been put onto the balance sheet because of this accounting regulation that's within the US in one sense. Is that a fair summary? How to explain that?
It is, yeah. So, I mean, yeah, the accounting rules say that if you can't show within 5 years that you are going to, and that you have the capital and that you're going to develop the asset and put it into the proved category, you cannot declare it as proved. And this is governed by the SEC, Securities Exchange Commission, believe it or not, in the United States, because in the US, oil and gas is considered a security. So if you look at Raccoon Bend as a field, right now we have about 2.8 million barrels of proved reserves. That means we can certify them, and engineers certified them. You can put them on a reserve report and call them reserves, as well as they're bankable. So I could take this reserve report to a bank and I could borrow money against that, right? Just like the equity in your home. If you want to take out a loan against the equity in your house, it works the exact same way because it's considered real estate. We've got an additional, the difference between 2.8 and about 4.5 million barrels is what we have in the other categories, the probable and the possible categories. So those are prospects that we know about. Those are resources or intervals that we know about, which have oil in them, but we cannot simply move them to the proved category yet. And so we will over time. And no doubt we will add more to that list, because if you go back in the last 12 years since the group has had the asset, we've already produced 2.8 million barrels, a lot more than the 1.6, I believe, that were on the books at the time. So if you look at the production of the fields in the last 12 months since the group that currently operates this with us, they've increased production over time. So if you look at typically fields will decline. So that just goes to show you that with some additional capital and development, rolling up your sleeves and doing the hard work, we can add value. So we can actually increase the production of the field by finding new reserves and putting that into production, which is continuing, it's just a continuation of what we're doing right now.
Thanks, Ryan. No, it's a very exciting asset, very much so. Back over to you, Claudia.
Thank you. And Ryan, and of course, some of the questions which are always coming from people as well, you said before, we have 90, or it's on the slide, of course, 90 wells, but we're actually close to 100 wells. Can you a little bit ponder on that? Because we have also made a statement, of course, that the first well was successful. We are in the process to drill more wells. So tell us a little bit more about that.
Yeah, sure. So obviously everyone knew that at the beginning of 2019 we started looking at this acquisition. It was really complicated, and so as a result of the complication of unwinding the existing owners into the new owners, right? So we took two or three sellers, and about 7 or 8 different groups came in, including us, including STORH. But during that period of time, there wasn't much development that went on during the year. So literally when we closed in August, I mean, we were hit with authorization for expenditures from the operator saying, we've got, I think I counted today, about 15 different operations that we've done out in the field. So that could be as simple as just replacing a pump downhole, right? It could be like we had a hole in the tubing. It could be a recompletion into another zone that hasn't produced yet to add production back. So this is all a matter of taking inactive wells or wells that have been sitting, or it could be a new drill, a new location where we drill a completely new hole to look for new reserves. So yeah, the first well and was successful, and based on the second well, we made another completion, so that was great. We're just finishing drilling the third well. We'll probably drill a fourth well before the end of the year. And like I said, we probably put 6 or 7 new or inactive wells back in active status. So I'd have to get an updated well count, but I'd suggest that we're probably near 100 producers now. We've added quite a bit of production based on the update that we just put out not too long ago.
And Ryan, just for the newcomers to the call, let's speak about continue on the risk management. Okay, I mean, if just from a layperson's point of view, okay, we know we own a real asset, but the biggest variable, of course, is going to be the oil and gas pricing to that. So how do you protect our investment with STORH on the pricing side, the fluctuation of oil and gas pricing?
Yeah, so one of the things that we did is we put a hedge, and that hedge is a little more complicated than I probably should go into detail on, because it's essentially a rolling hedge. So we look at sort of 3 to 6 months out, and based on that, we essentially take our net production and we'll hedge that depending on what the market does. And so we literally watch it almost daily. In fact, we pay an analytics company a few $100 a month to give us feedback from the market continually. So I'm constantly getting feedback and trading ideas and things that we can do for, say, January, February already, or kind of now I'm looking out to March and saying, you know, what are some of the things that we need to do to hedge the oil price to de-risk it? So, you know, if the price of, like for instance, the hedge that we just had, that we're still on right now, is a $56 floor. So if the price of oil drops below that, actually British Petroleum will cut us a check for the difference for how many barrels we pledged on this particular hedge. So it's just, and also we have an upside too. So if the price of oil were to go above $60, say, if it went to 65 or 70 or 75, we would get anything above 60. And of course, the hedging is going to change over time, but that's our current hedge that we're in now. And so what that does is that protects us. Just like if you own gold, if you could hedge gold at $1,500 and it dropped to $1,300, someone would have to pay you the $200 difference. So it'd work the same way for oil. And so we want to protect our investment, we want to protect our shareholders, of which we are. And so that's what we put into place, and we'll continue that sort of risk management strategy.
Fantastic, Ryan. Thank you so much. And of course, we also have the mineral reclamation in Peru, which is a huge project. It's a further, it's not like right now a project. It's of course further out. It's 2 years, probably a couple of years, 3 years out from now, because it's a very large project. But of course, you already have been down in Ecuador, so you have been there. So there's already things started on that side. But of course, it's a huge complex project, but very great potential. Again, very different than of course the oil and the gas. Well, because the oil and gas is already producing, and that's why you bought it, because it's a very low risk. So maybe you want to explain a little bit on that mineral reclamation for people, because they're always asking me about it, obviously in Peru, because I have a team in Peru growing, as well as in parts of Ecuador and parts of Uruguay, you know, all those countries, Argentina, Chile, where there's a lot of mining happening.
Yeah, I mean, look, the problems, you know, in the past with mining is not, you know, is not relegated to one area. It's all across the globe, right? You have big companies come in over the last, you know, whatever, how many decades, and have caused some pretty massive mining disasters. And so what we want to be able to do is utilize existing technology exists today to become more efficient, to reprocess and clean up some of these issues. So if you think about what you do in mining, is you pull out rock and you process it, you basically crush it and use chemicals to then put into reactors and process out all the minerals and metals. And then in a lot of cases, those tailings or those cuttings are left in huge piles. I mean, tremendous. If you have a picture of me in Ecuador standing on one of the tailings piles, I mean, this thing is 25 to 30 feet deep, and it goes back 25 to 30 years nearly in terms of time. And so if you look at that, the picture in the middle there, I'm standing on it. And so all of that crushed rock essentially has minerals there. I mean, sometimes up to 8 to 10 grams per ton. So, and there's also a lot of chemicals and nasty heavy metals in there as well that need to be processed out. So what we could do is the plan is to build a plant in and around some of these sites So we're working on a couple of deals now, and 2 deals in Ecuador that we're combining, and to build this new style, highly efficient reactor process to go back and reprocess all these old tailings here, and essentially recover the land that used to be jungle. If you look in the little background there, I mean, this is very, very dense jungle and pristine, beautiful environment. So with this process, we can recover a lot of the metals and precious metals and other things, and clean up the tailing and restore the land back to its original condition. Meanwhile, it makes significant returns for our shareholders. But as you pointed out, this is a longer term project. We're focused on now are things that we know are more near term, executable, plastic to fuel, and tying in the midstream, because, again, this is our business that we're involved in today, and it's, we're moving that ball down the field, if you want to use that analogy or euphemism, pretty quickly now with some of our new partnerships that we're going to be unfolding.
Yeah, and there's a lot coming out, obviously, in the next few weeks about that, those new partnerships, video material, etc., which is really great. I'm very much looking forward, as I know everybody's looking forward to that as well, because they want to see such stuff and want to see the materials. Now, from, of course, investors' standpoint, a lot of people always asking, well, the petroleum, the oil and gas, and then, of course, comparison with the plastic recycling, and now going into the mineral reclamation eventually. Those are longer term projects, but obviously they're very, very lucrative. The oil and gas is a very solid project. It is not as lucrative, obviously, as pyrolysis probably will be, and the mineral reclamation. What would you tell people?
I would tell people, when you look at various types of investments, think about it from a risk perspective. And that's what I always like to do, because when we created this company, we wanted a balanced risk approach. You can look at all kind of projects from one end of the spectrum to the other, right? Extremely safe, annuity-based, all the way up into, blue sky theoretical technologies. And I think we've taken a very balanced approach to that. If you look at just Raccoon Bend as an asset, I mean, it was producing well north of 20% internal rate of return based on what how we bought it. So that was sort of based on 2018, 2019 numbers. That's all it'll change in 2020, either up or down based on commodity prices and how we're able to do our hedge, and of course the production. If we're able to increase production, we'll be able to theoretically provide better returns than that when we start paying out distributions. I would say on the plastics to fuels, I think it's going to take us a little bit longer, obviously, to build the plant and get it up and running and into production. But I could see, I've looked at some pro forma figures and financials in the above 30% internal rate of return numbers. And then when you start looking at some of these other projects that we're looking at in Peru and Ecuador, I think you're looking at returns much higher than that, and some that I'm not even sure I want to sort of say out here, on this webinar, but certainly north of 50 to and even over 100% internal rate of return at some stage once you're in production. So quite substantial in what we can do, and all that does is add value for the company. I mean, we're looking to build and build capital growth into the price of STORH, of course, because what we want to be able to do is list this on an exchange, and based on where the most liquidity is, it could be one of these security token offering type exchanges or equity token exchanges, if the crypto market is buoyant enough, or it could be a traditional market like OTCQX or one of the stock exchanges in a traditional style listing. So we're evaluating those now, and we're putting the plan in place for hopefully a 2020 or 2021, early 2021 listing. And so we're working on that, because obviously liquidity is very important. So we can do that 2 ways. We can do distributions and we can list, or we can do both. And like I said, we have our annual board meeting coming up soon, and so we're going to be making some decisions with respect to that. It looks like we're already moving in a particular direction. I think people are going to be appreciative of. So that's all I will say.
Absolutely, and just to continue on that a little bit, Ryan, obviously the really importance, what people really must understand it, we are all right now in those stages of funding, of reinvesting, because we want to re-enhance the projects, because the importance and the vitality of everything what we do here for us moving forward is obviously to be able to raise that money that we can as fast as possible move into that midstream, which is of course the plastic recycling, because you already have the vast advantage in order of other companies, of course, who do plastic pyrolysis recycling, because you already have existing company which are in the blending of the crude. So absolutely great. But of course, we know, you know, Bill know, we all know, we have many times discussed it. People sometimes because they don't really understand clearly what they have, or they don't really understand clearly how to calculate, they're a little bit reluctant, and unfortunately many go to those companies and scams with 1% or 2% a day, which of course we know clearly it doesn't exist. It doesn't exist.
No.
And we can prove them wrong as well, as Bill and I, we have actually done so. We went to one of those companies in New York, checking them out. And of course, it is a scam. So, but we don't want to talk about that. We really want to talk about, and that you guys understand that this is not a quick rich scheme overnight, but this is a very, very solid project for you, where, you know, I'd rather have something very solid, which is going to pay me for a very long time, than rather have the short term right now. Okay, I understand we need to make money right now, but therefore we have also a business system, a business platform where you can actually do so. But maybe you want to touch quickly on the token price again, or Bill has a question there before I move into the next.
Well, I'll tell you what interests me. It's something that's real. If you go back to the currencies historically, gold, US dollar used to be backed by gold, currencies were backed by gold, there was an underpinned value. Now, you look at assets that we own here, there's many tokens and coins listed on the crypto exchanges, probably only 5% have an asset. We at STORH, Ryan at STORH, we are owners of STORH tokens that has an underpinning asset, an asset that has value, something that is real, that can't go away. It has an intrinsic value. It sets it apart from anything else that's out there. You know, you can have all these different trading things and those things. It's air. This is real. You walk across the 5,600 acres of land. You speak to geologists who have been involved for many years and engineers. You see nearly 100 producing wells on this particular site. I haven't seen all of them, but I know there's nearly 100 producing wells there. It's just such a big site. You know that you're owning something that is absolutely real. It's clicking over 24/7. It's producing, and there's an increasing demand for the product that we actually have. To me, as an investor, long-term investor since the 1980s, that is a no-brainer. Hence why in 2004, I put 1 million Australian dollars, 860,000 US at that time, into a company run by Ryan Messer, because I got it. I was buying into something that had real assets. But I had to make my experience. I must say, I'm not going to brag about it, but in the 1990s, of course, I bought into the dot-com boom, wasn't so smart, and I got sold into stuff that, you know, into internet stocks that were backed by air, were backed by strong stories. Now, everything's fine in the bullish market, but when the market changes, we often find the emperor with his pants down, as they say, and everything is revealed. You know, here with us, we have something that's real. It's a tangible asset. It's there. It's going to be there for many decades into the future. So that's our foundational asset. And what we're building upon now is very exciting, because that's going to help grow the token price. It could even be a digital share price up towards the €4. And we do that by buying real assets, not just nice stories. We're buying real assets. That's what's adding the value to the digital share price. That's why I'm in the game. That's why I put money at risk, because I like it, because of those fundamentals that we have, that most companies out there don't have in this space.
And great, absolutely, you're correct, Bill. And one question for Ryan, as well as Gary mentioned there, that about the exact number of wells. I mean, you're drilling currently. You will release, I believe, the exact number of wells. And at a slide, we always have there, of course, how much is roughly producing per day right now. But of course, this is the whole field where STORH is a part owner of.
Sure. I'm sorry. Can you repeat exactly the question?
Yeah, and it was just like I was just saying. Gary was asking the question that
Yep.
if you exactly would knew how many wells there were, and I said, well, Ryan is gonna probably after the you know you're drilling currently more wells, and so probably there will be coming out a statement of that. But again, people need to understand that this is the 800 barrels per day production currently doing, of course, now
Yeah.
increasing the new wells. It is a combined production of all the owners, which of course of that field, correct?
Yeah. And I mean, look, it's one of those things where you have to imagine, I mean, that many wells produce, and a lot of them will produce, you might have 5 or 6 or maybe even 10 wells that all produce into the same tanks. And so you don't know exactly which wells are producing. So what you do is you have to do these individual tests where you isolate a well, you produce it into the tank, and you sort of measure what it's making. So imagine 100 wells doing that. Some wells go down, some wells need constant workover, because you've got all these moving parts, and you have pumps and things that go wrong. So to give an absolute number, I mean, on a monthly basis, I would say it's going to be give or take 2 or 3 wells that are always on constant maintenance. But no doubt when we started this, we had over 90 wells in production, and I know we put on at least 7 or 8 new wells since then. And we're working over a few more. So I would suspect that right now we're probably pushing nearly 100 wells into production. And there are probably still another 30 or so inactive wells that are being evaluated. You have to also keep in mind, we don't have a team. We're not Exxon, right? So we don't have, dozens of employees, because obviously we want to keep the costs down too. So we've got an engineer, we've got a geologist, we've got a geophysicist, we have an engineer in the office, and we have analysts in the office. And then of course we have field people. So there's only so much activity that we can do. And of course we're managing our costs too, because again, we don't want to, overburden the owners, and us included, with so many capital calls that we can't stay on top of our business. So, it's just about managing and scheduling all that out. And so every year we're going to drill 4 to 5 new wells a year. Some of those wells aren't going to work out, and it's okay. That's part of taking the risk. But the wells that do work out end up paying for themselves, and the ones that don't work out. It's all economics. And so all this gets worked into the financial model. But so I don't have an exact number as to say we have 96 or 97, but because that number continually moves as we do workovers out there. But you can pretty much count, and and again, in the daily production fluctuates as well, because really what we base that on are sales. And so you wait until the tank is full, and then of course you call in a load, which is somewhere between 160 and 180 barrels, depending on the type of oil that it is. And so those sales all kind of average out. So over time, you get a sense of, what that field production is. And of course, all that's then rolled up every month. But that's generally 800 barrels a day. And I would say over 95 producers now. We could probably update that slide. But yeah, I mean, look, our plan is to continue to add value. And to do that, we're going to drill, we're going to develop, we're going to convert inactive wells to active wells, and increase our production. And when we increase our production, we increase our cash flow. And when we increase our cash flow, we increase the internal rate of return back to the company.
And of course, back to the asset holder, the token holders, meaning the price is going to go up.
Absolutely.
So basically, with that, of course, on that slide here, which I have on a few minutes now, obviously this is of course the plan, so that we eventually can launch on an exchange to put the price up. But of course, we're coming up to an anniversary here, so the first one of STORH, actually even long before the white paper was out, where we started, where we started to raise some funds, which is really great. And I know you have prepared something really, really great for the people there, if they, of course, reinvest. So there's a really great plan. I mean, I was like a little bit surprised and shocked to hear that, but I cannot tell anybody now. But I know it's going to be probably a few more days, and then it's going to be released, which is fantastic. And wow, it's a really great plan which you have put in place there as of this 1 year coming up anniversary. So looking forward for that. So thank you, Ryan. We're moving on to I don't know if Bill has any more questions, or but because then we're moving into, of course, the later part of this presentation, just finishing up with those digital shares. Maybe Bill or you want to touch on that, and then we're gonna show, of course, how you can make money fast, quick, now, today, if you wish, with the marketing plan.
Well, I think this what you see here is a bit of Ryan's ingenious. You know, we have a token on the blockchain which is on Etherscan, so we know the transactions occurred. But primarily by doing what Ryan and the team have done, we've gone one step further. You actually get a certificate signed off by the CEOs of the company, and we also have the private placement memorandum. Each member cannot buy STORH unless you sign the private placement memorandum. And other than the normal disclaimers that lawyers put in there, it gives you legal ownership over the US company, the equity that you have in the US company. So John Doe, for example, it says here he has 161,000 STORH tokens or digital shares in equity in a US company called Source Rock Energy Partners, a Texas-based company. So this is really important. This is a legal binding document that gives you ownership over your shares, your digital shares, the equity, the money that you put in the US company, which is a holding company for those particular assets. And I don't believe anyone else in this particular crypto space is actually doing that. In fact, when you buy a token or a coin, you don't own. You may have done a transaction on a blockchain, but you don't own the underlying utility or any technology or proprietary value that it may have. Here, this gives you absolute value. This is a share that we move to an exchange. It's a possibility rather than a crypto exchange. You have real shares, and this is something that you could actually leave for future generations. It's a legal document binding the ownership in these assets. That is key. That is building real wealth, not just by having the assets. Secondly, you've got legal proof that you actually own it, and that's also very, very important. So thanks for doing that, Ryan.
Yeah, no, I mean, I think it makes perfect sense. I mean, so remember, these are shares first. This is equity in a company first, and a digital share second, right? And a representation on the Ethereum blockchain through a smart contract, just to give us flexibility. So remember that when you're looking at other offerings and you're comparing them, and you're saying, look, what do I really own? I own a token. Is it a utility? Or is it truly reflective of the ownership in the company? And my ability to, have voting rights and be able to present this and say, this is truly my asset. So that's why we created this share certificate, which is representative of the historical paper share certificates that were issued in the early days in the stock exchange or private companies. So that's why we did it. And yeah, I think you said it best. This is equity in a company first.
Do you want me to continue on this, Claudia?
No, you do.
Okay. Well, I'll touch on this very briefly. Ryan actually mentioned Robert Kiyosaki earlier from Rich Dad Poor Dad. Well, this quadrant here, this representation of the cash flow quadrant is really from Robert Kiyosaki. And I had the pleasure of meeting Robert back in 1998, 1999 in Melbourne, Australia. In fact, he was launching his book called Rich Dad Poor Dad. And there was 1,200 people present in the room in Melbourne on the Yarra River there in the 5-star hotel. But at the end of the night, he said to all of us, tomorrow morning, I'm putting my capitalist hat on. I'm going to teach people how to take a private company public. A bit like what we're doing here with Ryan. We're taking a private ownership of a company called STORH, and we're going to take a public bid on an exchange. He said to all of us this night, it's a 5-year plan. It's going to be higher risk. Don't put money in you cannot afford to lose. And he said, tomorrow morning, if you want to be engaged in this, because it's high return as well, please be there in the morning and I'll show you how to do that. Now, we're all there. The reason I'm speaking about this is that what we're doing here with STORH is nothing different than what Robert Kiyosaki's been doing for many, many decades in one respect. But anyway, I turned up the next morning. Out of 1,200 people, there's only 9 of us that showed up. And I invested into 2 of Robert's companies. One of which my children still own ownership in that real company today. It's actually happens to be listed on the Toronto Canadian Stock Exchange and it's gold and silver. But the point he's making here is, if you're an employee, it's fantastic. you're providing a service, and for providing a service, you're getting paid an hourly rate for your time. But of course, the problem with just earning an hourly rate for your time is there's only a limited amount of time each day, isn't there? There's only a maximum of 24 hours. So you're capping your income. You're capping your potential rewards by doing that. So if you really want to be able to make real wealth, you need to be able to bridge over. You become a self-employed. I first became self-employed in 1986, owning my first hotel. And as I said, I had 4 hotels. But then, of course, I'm there working hotel. But to make real money, you need to be able to make money when you're sleeping. And when I learned that, to me, it was a no-brainer. STORH is part of that. Very much my investment with Ryan and the company in 2004 was very much part of that. You're investing in real assets, assets that generate income, and you don't have to be there to generate income. It's been done for you through the expertise of other people. And this is where you move over to the right quadrants. So with that, Claudia, I'll pass it back to you. That's my brief little story about Robert Kiyosaki and my experience with the quadrants. So you need to have the best of both worlds. If you're a nurse or you're a teacher or you're picking up the local garbage, providing a service to people, absolutely fantastic, especially if you love what you're doing it. But if you want to set yourself free financially, you need to have more than that. Keep doing what you're doing, but at the same time, have more by investing some of your income into smart strategies as we're doing. And that's really what he's talking about, moving over to the right quadrant. So back over to you, Claudia.
Absolutely, and this is why we have, of course, here a vehicle. In fact, of course, we have 2 ways that you can actually get started. One is you join as a customer. You hopefully by now have learned how important gold or silver is, and you're going to get on a wealth accumulation plan with gold or silver. I hope that you're going to make that smart move, because again, this is what I'm doing since I was introduced to that. That's 2008, and certainly has been doing well, no headaches, because gold or silver is money. Which is really great, while other things are lost. Yet, of course, that is good. But or you can purchase and I would say better purchase store assets, and you can really do so from as little as 50 euros. Of course, there's upwards no limitation to how much you would like to buy, and you then own real assets which are producing a real income. Right now, that real income is being put back into more drillings, but eventually you will see the fruit of our all efforts and labor, so that you can earn on the increase if you want to sell out eventually on the asset value of STORH, which is not really my intention. I may sell out a little bit, but I really want to earn from the long term. Or as I said, eventually you're going to see those quarterly distributions from these assets of STORH, and some really exciting news which Ryan has for us very, very soon coming out. But then the other way to join is, as I said, like if you need fast money now, you need money now, you need to make it now, you need to get it somehow, you need to make money now. Well, you join as an affiliate. You purchase one of the affiliate packages starting from as little as 99 euro. Again, there's no limitation to whatever you want to put in. Commit to a 50 euro per month wealth or asset accumulation plan, meaning you're accumulating assets, and you earn from all your customer and affiliate sales. And the way you earn is like now fast. It's being literally almost instant showing up in your back office. You can withdraw it after 2 weeks because we have a refund policy, which is really, really great. But this is the way how you can earn very fast commissions by sharing this message. It's really great, amazing message, which Ryan and Bill have just shared, of course, here. And the packages, of course, they contain a certain amount of STORH tokens and then all the other facilities in order that you can run your business and operate your business from anywhere in the world. And as I said, and I mentioned probably in a few days from now, so I'm going to make you excited. In a few days from now we're going to have some great announcement. And this is all in combination, of course, of our 1 year sort of anniversary coming up from STORH. So you're going to get a lot more when you purchase, of course, our packages, which is really, really great. And as I said, they go up to 1 million euro. Now, anytime you sell one of those 99, 170, 390, 790, 15 or whatever package, 9,000, 18,000, a million, you make a fast start commission that is instantly reflected in your back office. Let's say you join somebody with a 390 package, you're making 146.76 euros in commission. Pretty great. I know in many countries this alone already is changing the lifestyle. So it's not always only the big ones, it is very often the small commissions which already can very much change the lifestyle. And of course, when you look at the of course the upside of STORH once we gonna launch on an exchange, and as of course we mentioned, if we raise the funds that we can build all what we want to build and wish to build, well, we believe that we could see a price of the token of 4 euros when launching. That means you a package of 1,500 euro, let's say, just in theory, you buy that, you find 3 people who buy that as well. Well, actually not in theory, that's actually case, so that's the commission you're making. You buy 1,500, you find 3 who do the same, your initial investment is actually paid for, meaning with 3 people, that's 3 people introducing. No matter if, let's say, the 99 euro you sell 3 99 euro packages, you basically have your initial investment covered. There's 170, the 390, the 790, the 1,500. You have your initial investment covered by just getting 3 people at the same package. But of course, on the listings on the 4 euro exchange, which I had the slides a little bit messed up here, you buy a 1,500 package, you're currently getting 1,395.33 STORH digital shares. And at a listing, that 1,500 package would actually be 5,581 euros if you were to sell it at 4 euros price. Pretty good. I mean, I must say, but you know, the real power of residual income, meaning residual income in the marketing, not from STORH assets, because this is another residual income which is going to come. This is really from the sharing. Sharing is caring. You can have very different ways to make money. That is, of course, the fast start commissions, the direct bonuses, the incentives, including, of course, the luxury travel. Everybody wants to travel. I just came back from Milano, New York. We were in Colorado. Before that, we were at Africa tour. If you like that, well, certainly you can do that. You can own a global business, but you also can earn from the team effort. When you help your team from their efforts, you can actually earn up to 7 levels commissions of all their customers and affiliates they introduce, and eventually a 2% unlimited gold leadership bonus anywhere down in your organization, which is really fantastic. So when we look at this 50 euro monthly asset accumulation plan, again, 50 euro is okay. In some countries it may be a lot, but let's face it, here in Europe, in Australia, it's not really much money, is it? In America, it's not really much money. I mean, the breakfast, literally, if you want to eat a good, and I like healthy meals, the breakfast for 2 people is that in New York. So that's a breakfast, yeah. So with 5 people, 5 total members, and that's just an example on how this works. So with 5 people who are on a asset accumulation plan, so those 5 people, each and every month, they accumulate their assets. They pay 50 euro. You're making 35 euros from that. Almost covers your plan. In fact, 8 people in your first or second level cover it. But let's say those five people, they're excited. They want to also share it with other people. They also want to not only just benefit from the assets, but also make fast start commissions right now and right here. So they share it with other people, and let's say in this example, 5 introduce 5. Well, then you're 25 people. That means you're picking up another 175 euros, which is of course adding up to 210 from your first and second level. And 210 euros on a monthly basis, you know, it is something extra. It is not bad. In fact, when we move to the next one, which is now, let's say those 5 people who introduce 5 on 125 people, all on a 50 euro monthly asset accumulation plan, you're picking up another 3%, another 187 euros 50 from all those 125 people. So that actually is almost comes up to 397.50 euros. And again, I know they're saying in America, when of course we had this the 2008 crisis, it was, if people would have just another $500 extra a month, that would have probably saved most of those people from having to move out of their houses, which of course they lost because they couldn't serve anymore their debits, right, or their bank loans basically. So you see, this is a very powerful asset accumulation plan. And as I said, with 8 people, that's 8 customers or 8 affiliates who purchase their 50 euro in their first or second level, can be indirect or direct people. Direct meaning people you introduced or they introduced. You actually make 56 euros, meaning your plan is actually covered for, and you have at least for a cappuccino to go out for. And of course, all those packages in the United States, currently they are replaced with physical gold and silver. And the incentives ranging from a phone to, from a watch to a phone to a laptop to exotic vacation and even going to the assets. And with that, I want to end this here with a video. So your time is now to accumulate real assets, make real income, and have a real lifestyle. If you have any questions, well, go back to the person who invited you to this presentation, request a STORH white paper for more detail, or ask for more detail on the compensation plan. With that, I want to say thank you to Ryan and thank you to Bill for this great, more in-depth, more intense webinar, meaning we addressed quite a few FAQs we had coming in. And I look forward to see you on our next Saturday presentation. And yes, I really hope that you, based on, of course, what you learned today, are gonna really dig in deep and really look at where you are in your life and how important, of course, it will be and it can be accumulating real assets for your future. So make a decision now. Don't think too much, because we're going to come up with an amazing incentive plan. We have already come up with it, but which is going to be launched very, very soon. So with that, again, thank you guys, and I see you on the next presentation.